5 essential parts about intraday trading that will massively improve your trading literally forever. Especially when you're stuck somewhere in your trading or you're at the beginning phases and you're bidding attempts and you're still figuring that stuff out. This video can literally completely change the way you will approach the markets forever. Once you watch this, you will never see the market the same way. That's guaranteed. And you will start connecting pieces of the puzzle and finally can see the market with more clarity and solve the confusion you most likely have right now. So how do we do it? We of course have to start at a lower level, level 1. And this is of course not where everyone is stuck right now, but you have to understand that this is a level where you can easily get stuck for quite a long time as the market looks like this to you. And you'd be like, what is even this? And for those that don't recognize what that could be, you already probably stuck a little bit more because you're focusing on trying to see the charts in this point of view. Like, what is it? You may be trying to find some trends in here, some fib retracement, some mitigation zones of order blocks, some structure breaks, whatever it might is. But the problem is you see the chart in this zoomed in way and you can't see the bigger picture of what actually will give you the clarity and let you read price between the lines and actually see the beautiful story it tries to tell you, right? Because when you start zooming out, oh, it gets a little bit clearer on what that might is, and you will start seeing how everything will connect in each other until finally, boom, got you there. You you reach levels you currently can't even dream of or imagine it could be possible, but it is, and of course we can move into the reasons how that is. We have to start though at the very beginning, and that is lesson 1, the illusion of retail strategy or retail trading strategies. And that starts with the unlearning the wrong beliefs you currently have and understand that the market is in quote unquote a controlled randomness. And you have to experience this awakening moment like Neo in the Matrix did in here to understand, oh shit, you've been in this false belief of how the market really works. Because we've all been there. You learn some new strategy from a course, from YouTube videos, tutorials, some boot camp somewhere here and there, and you think like, wow, that makes so much sense, and you test it out and you get absolutely smoked. You join a community, seemingly everyone struggles, some win, you don't understand why, some being consistent, some others don't. The ones being consistent maybe do good for 1 week and then absolutely get smoked as well. There's no consistency, and you wonder like, why is that the case, right? And there's a simple exercise that will help you understand this phenomenon of hindsight, quote unquote, hindsight trading a little bit better, because you technically can make any strategy work. Any. It doesn't matter what it is, if it's fib retracement, if you're trading trend lines, breakouts, whatever, some EMAs, it doesn't matter. Every strategy can technically work by luck. As same way as a broken clock is right twice a day, every trading strategy can be right and obviously bring you wins. But this is not how you should approach trading. You have to learn to understand the reasons. But let's just prove the point of this quote unquote controlled randomness in the market so you understand exactly what I mean by that. Alright, so how does the random line experiment look like? So basically you can do it on any chart you want on any time frame. It literally doesn't matter what pair or time frame or indice or whatever it is. For this example, we're just using US 30. Why not? And what you can do, you just take a random line. Best case, you even go somewhere like literally in middle of nowhere, so you're not getting biased by the chart. And you literally take, for example, you can do this in any way you want. You can draw like a trend line with like a random angle like this. Okay, you do the same thing for a different trend line. Nice. And then you also take a horizontal line and just place it randomly in the chart like this or like this or even like this. You can like squeeze the chart a little bit together, make it like this, boom, and like here. Okay. So basically, we have 5 random, literally completely random lines and 2 random trend lines. Okay, so how does the random line experience prove anything? Okay, so what we're gonna do, we don't change anything here, right? We just leave the lines how it is and go to the left to see how price magically reacts from these lines. For example, as you can see here, boom, perfect resistance, perfect support here. Yeah, of course, it's like completely random. Same way here, you could argue, oh yeah, your price couldn't break through the zones. It's a clear support level. Same thing here. Look at how many wicks it has. And then magically it wicks into this resistance and it tries to break it, break and retest. Oh my god, and breaks it and blah blah blah. You see the illusion that these levels are real goes throughout the entire chart. Look at this. You can't even make this up. How many touches randomly this line, like how many reactions this random line caused by price. Like this is completely random, as you just saw. This line has nothing to do. You need some random trades from us. Let me just remove that. Right? For example, even here, okay, how is it magically reacting from this? Break and retest of this line. Nice. Or let's see if we find some other ones. Okay, like explain that. How does the touch here, here, and here absolutely perfect fall into this random line we just drew? And obviously you can go as far back as you ever want to. Same with here. How does it magically react off this line? And same way here, right? You can't make it up. Or even here, 3 candles reacting from it, keeps reacting, keeps reacting. It's completely random, right? The same way with trend lines. So these random lines we took, we can just now take it, the same line, and place it anywhere the chart and even see, oh my god, look, for example, this perfect trend falls exactly onto it, right? Or like here, look, okay, this point, this point, this point, then this point reacts on it, touches here, comes back, touches on here. Again, we draw this completely random. Look at this. You can't make it up. Boom, 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 reacts to it, break and retest. It's completely random. Same with this line. We can just put it anywhere. For example, here. Okay, here it didn't do anything, but guess what? Oh my god, the trend from here and then magic touch from here. Oh my god, look how perfectly boom, 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 boom. It's a completely random line. Guess what? We can do the same thing again. Random line, or let's change the angle. You see, it's not the same angle. I just randomly drew this. And let's even go like whatever in the past somewhere. Okay, so how does this, for example, here, boom, boom, how does this make any sense that it reacts randomly from here? Or here, look at this. Boom, boom. You can't tell me that this makes sense. I completely just made this trend line up with the random angle and it perfectly, starting from this point, touches this. Explain it. It doesn't matter. Like it does not literally matter. Trends and support resistance levels are completely fake. Okay, you can do this test literally yourself. If you go to your trading view right now, just draw some random lines, and you will see this funny phenomenon of like how this is the illusion of how it works. But we can obviously go a step further than that. Okay, as we explained with like trends, for example, let's just go in indicators on TradingView and let's just type in trend line. Okay, so we see like a bunch of trend line selections we could use, and let's just use random ones, right? We just use Luxolgo, that's the biggest indicator provider in the world, so we just use their trends, and then we also use those, and those. So we're just using 4. No, that's Luxolgo again, so let's just use these ones as well. Okay, and you see how beautiful messy our chart already gets. So here's my question, and you can answer that as well if you want. If trends are so simple and everyone trades a trend line strategy, for example, how comes that these indicators here are all showing different trends? There's not one trend that is always the same, and I would even argue that the right trend is not even drawn anywhere. Like I would say this, the random line we drew, shows the best trend, the purple line here, and that's not even shown by any of those 4 indicators. Maybe this one in here, right, or this one here, but like, why is it not like showing this trend, for example, right? So the problem with these strategies is there's no consistency. You can have 4 random trend line indicators and you will have a million different trends, as you can see here. There's no consistency, right? And the right trend, you could argue, is what is the right trend? Again, it's like based on the user, on how you interpret the trend out of these million different trend lines in here, right? So it arguably does not make any sense of the consistency, right? Again, you can, maybe this one is the first trend that we have 2 indicators showing the same one. This one, and I think this red one in here. Okay, but then what the freak is this trade? Or I'll try this trend line, or this one goes straight through it. It's just, okay, and that's all created by indicators. There's zero consistency with these indicators. All right, so the survivorship bias. What is the survivorship bias? So basically, it comes from a real life example from World War II airplanes where they returning aircrafts, they laid some research and looked at the bullets, or like the bullet holes where the aircrafts have been shot, to figure out where are the weaknesses of the airplane. And all the red dots represent like bullet holes from the returning aircrafts. And the question now is, where would you armor this aircraft, knowing that this is aircraft that came back after war? So think about it for a second. And if you chose these areas where the red dots are, I have bad news for you, because this is the illusion of getting tricked, right? If you focus on those spots where the aircraft gets shot and returned after, you're focusing on the wrong spots. Same way in your trading, because it doesn't make a difference. If you get shot in here, or 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 in here, the aircraft can return, it still can fly. But guess what? No aircraft got shot here, or here, or here, or here, and returned safely to the base. That means these areas in here are the essential carrying pieces of the aircraft. Therefore, you have to focus on those. And that is the tricky question, right? Because most people focus on the wrong areas, which literally don't make any difference. For example, a trend line, a fib retracement, a random order block, market structure, that are all reasons in the market that literally will not give you the reasons why the airplane flies. Okay, you have to discover at the engine area, at these carrying parts of the airplane, and only then you will be able to understand why the aircraft is flying. Not at trend lines, not at fib retracements, not at EMAs, not at market structure, the actual pieces that drive or make the airplane fly. And the other important thing is, it always has to be the same thing, right? So for example, if you remember the example of the trendline indicators, 5 different trendline indicators, a million different variations, you can't just mix a different airplane in the same statistics, because okay, where are the engines in this airplane? It will be very hard to find the critical parts in here if you compare it to this one. So you have to only look at the same modules of aircraft, and as we discovered, it's impossible with a trendline, for example, because you have a million different trendline examples. So we have to find a way to make trading exactly the same all the time, to approach only the exact same examples, and therefore be able to build a solid strategies, rules, and consistency around one specific setup that is always the same. And this is what 95% of traders don't do. Bringing some clarity and some consistency in our charts. How are we going to do that? We just open indicators. Again, we can use indicators, why not? And just type in lit timings. Okay, so this one from me in here, yeah. So you just click on it, bam, and it will open these beautiful boxes. Many of you maybe know already what those are, but this is a session indicator. If you want some more details, I will not explain this right now. You can just go here, and then you can click on this actually, and it's also open source, right? So you can click on this right here, and then it will also, if it loads, there you go. So it also gives you all the instructions or how, like, what the script does and how you can use it. And yeah, just explore a little bit with that. It's all explained in here. Let's not do this now, right? But the most important thing what it does is it shows session timings and the most important ones, which is Asia, London Open, and New York Open. So that's basically what those three boxes are. And this obviously hits many birds with one stone, as this gives you the power to only backtest and structure setups in a way that is happening or that are happening in your time window you actually can trade. So let's say you can trade only from 9 to 10, 1 hour a day, for example, right? Okay, then this is your time window you can trade in. Perfect. So you can find setups that are always happening in this time window and build rules around that. Sounds funny at first, but this is how consistency comes in. For example, one of the easiest strategies there is, and also one of the most effective strategies there is, if you just take Asia range, the purple box, wait for the inducement of Asia range, and then trade in the opposite direction. So here's the inducement. Here's is, for example, your setup after, for example, a relevant break of structure into mitigation. Boom, right? In this case, it would be in New York, for example, right? Here, same thing. Asia gets induced. Boom, relevant break of structure. Entry in here with New York Open. Boom, but that's a new candle, so probably tricky one here. Here's the same thing. Boom, Asia inducement. What is this? Boom, relevant break of structure into mitigations, which get missed, and then boom, goes another direction. Here, same thing. Asia range gets induced, right? Here's just equals in here, boom. So trade somewhere in here, probably in lower time frames. Nice. This one even took the sales enter buys, right, with a random trend line. Right? But that's something we don't have to go into now, right? But the beautiful sell into beautiful buy, that was the news where we closed it out. H range, boom, gets induced high. Sell is probably in here somewhere. H range gets induced high, sell is probably in here somewhere. H range, induced low, buys in here, boom. H range gets induced here, buys in here. So you get the point. It's the same thing. Obviously, this doesn't happen every day, of course not, but it's a very consistent thing. As you see here, H range, boom, gets induced, boom. H range gets a little bit tickled in here, and then boom. H range gets induced low. You get the point, yeah? So this is something you already can build, yeah, your strategy around based on just timing, based on specific patterns that happen. Obviously, we didn't make that up. That is just how the market works in, yeah, a very consistent way. But your most important goal should be to build a strategy around the same exact thing. As we just walk through random trend lines, you can never ever in your life build a consistent strategy around trend lines, because everyone sees the trend line the different ways. You just saw with the indicators. Trend line does not equal trend line. If you take 10 traders and tell me, hey, show me the main trend of the day, they all will show you a different trend line. Again, for example, one shows you the trend line like this. The other one shows it like this. The other one shows it like this. The other one shows it whatever like this. The other one shows it. You get the point, yeah? So this is not consistent. But if you find something that is always the same and also based on timing, then you have a proper strategy that works in the same exact way all the time. And this is, for example, what we did and also programmed. We have rules in place that are always the same. And again, the basic rule of thumb is when you have a strategy that is not programmable, you don't have a strategy because you're just making shit up. That's why you see 99.9% of indicators or whatever, they are shit because again, they show random stuff and it clearly only works sometimes. And people be like, oh yeah, it doesn't have to work all the time. Okay, but what kind of strategy is that? And you follow something that is not even consistent in itself. You can just literally guess and be lucky with it. That's the same thing. And this is not trading the way you should approach it. You should try to understand with logic what is going on. Okay, and you only can do that if you have a systematic approach that is always the same. Of course, even then you will have losses. Of course, it will not work all the time, but at least you follow the same exact rules every time. Okay, and this is what you have to try to do. And that is, for example, also how you know that this is a beautiful cell right here, again, live chart right here, because it's very, very obvious what they did. Like Asia gives a huge dump, breakout traders selling in here, huge momentum speed, and it shakes out some sellers in here, gives buyers the false illusion that this is now going back up. But what is it really? Takes out breakout traders like at break even. This is Asia midline, for example, right? You have some internal liquidity bills that get induced high side, right? Again, the world is now buying people from a London session and New York session, right? If you go on M5, yeah, that's definitely a nice short in here, and guess the Oracle. All right, it also projects it out this exact play into these areas, right? And guess what exactly happens? So this is a short, definitely it's very valid. I'm actually gonna take that. And yeah, liquidity targets are definitely below here, for example, right? So you can just take it from here, take profit is down there, and that's just such an easy reading. You can see it from 10 miles away, just understanding liquidity, the overall intentions, timings, and obviously a lot of other things we get into. Alright, so here's the outcome of this very obvious play we just walked over, as it's market close right now, and there's a lot of lessons in here, so yeah, we're gonna pack this. There's a lot of lessons, right? So we talked about the whole play leading into that, and we're gonna go into details a little bit more, tapping into this POI in here. Right, again, it was a little bit big, and this also brings us to the next lesson in here, which will be refinements, for example, but first understanding the bigger picture of how they're building up liquidity, inducing it, and then actually mitigating something, which is the build up into some mitigation cycle, and then also target picking. Again, this is like an entire topic by itself, but as you also can see, we had this target in here, and why it is so important to have the right targets. For example, some people would target down here, and guess what? You boom, 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 get a whole break even, bite yours, and then obviously it goes to the next point. That is completely on purpose. It's very obvious. That's why we also said, for example, this is the liquidity target and not this right away. But targets, that's an entire different topic by itself. But first, refinements, as we had it like this on the edge, this already taps or mitigates the M5 POI from the imbalances in here. But guess what? When you refine it to the M1, you can do the same exact thing. So what is the last POI in here, which you want to get mitigated, is obviously from here, as this is the last supply demand candle. Again, this is just some playing around. The longer you do it, the more refined you're gonna be with it. Again, you could do it like this as well if you really wanted to, based on this candle, but these are a little bit more accurate if you just take this order blocky kind of scenario from this candle onwards. And then obviously you also can see that perfectly tapped into it and gives you the more refined M1 entry than just the M5 bigger order blocky situation from here on, right? So the M5 entry would easily be here. M1 refinement is here. That just gives you another layer. Or again, this news candle even gave the perfect re-entry, right, for these RBOS, either here. That stands for relevant break of structure, because again, we're not structure traders at all. We look at structure, but it actually does make sense. First, identifying the cycle fully, like build of liquidity, inducement of liquidity, mitigating something to the left, and then looking for relevant break of structures, and then into mitigation areas. In this case, obviously, here, this area. Again, this would be a news candle entry, so that probably is not a normal entry. So the only entry we had is this one, or the M5 POI mitigation from this point on, right? And then obviously targets have been in here, right? So a very, very simple one. So you just see how that would work live on the edge. It's actually as simple as it looks like. Maybe most people overcomplicate that stuff, but simplicity is literally the key. But let's look into the build-up inducement mitigation cycle a little bit more into detail. Alright, so the build-up inducement mitigation cycle is actually pretty simple. So you have to think about it like this. So you know what a build-up is, hopefully. If not, then just a quick summary. Build-up is when they're collecting orders, building it up from buyers and sellers. They give them some reasons, channels, trends, whatever. You can call it like ranging or channeling. I had to collect some orders. Then the inducement, boom, comes in to induce, obviously, the breakout, for example, from this range. Also, momentum and speed make people excited. And also, again, keep in mind, an inducement is two birds with one stone. It also takes out everyone that wanted to sell, of course. Whoever sold in here, in here, in here, or in here, or even down there, they're all getting stopped out with the inducement here. And then, of course, this is usually what happens, right? Again, there's like a lot of theories behind this exact thing. Some call it accumulation, manipulation, whatever. It doesn't matter. It's just building up in the orders in here, building up liquidity, inducing people in the wrong way, or stopping out the people that have this direction the right way, and then obviously go in the other direction. So where does the mitigation come into place? At some point, if you have like this build up, nice, then the inducement of it, the inducement always comes with momentum and speed. It needs a stopper, a stopping force to the left. Otherwise, it literally can go on forever. That's why you should never try to pick like the end of an inducement other when you have something to the left. Very easy example, again, we will see millions of them, is exactly this what we quote unquote predicted in here anyways, right? You have the build of liquidity, then you have a little range in here, equals, boom, inducing it here, another set of equals. The stopping force, again, other than, for example, liquidity target like Asia midline, is always these order block situations with imbalances. M5 was already done, mitigated here. M1, as we broke it down, was in here as well. So this is the stopper for the inducement after the build-up inducement in mitigation cycle. The same way here. Again, this in here is a huge momentum run. Again, this is not really the nicest build-up in here because it more like internal inducements of all these structure points in here, boom, in here, all of that. But then again, where is the stopping force to stop the inducement? Bam, 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 exactly this in here, right? This POI, again, with the imbalances left, is the stopping force after we identified the inducement the right way, okay? So this is how you have to identify it, and this is always the case, right? Again, look, and the more better you get, the easier it is for you to identify. Build up in here, sideways build up. That is the inducement. It needs a stopping power. Guess what? This is a very obvious smart money trap. Why is this a smart money trap? Again, these POIs with the wrong understanding are pretty useless. That's why we call it smart money trap, because smart money traders, they love to take limit orders of these order block things with imbalances just like that, but without understanding the right context. You need the build up first. You have the sideways movement, then the obvious inducement of that area with momentum and speed. Right? Again, this is all equals, 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 equals. Huge sideways build-ups, inducement of it, and then again the last area or the next area for an imbalance would, for example, be in these areas, right? And guess what? Boom, filled these imbalances, tapped it with the inducement. That is your stopping force for the inducement, and that's your perfect short in here. And guess what? Another confluence. Again, we're not going to completely blow everything out here. But again, timing is a super good indication. London Open to the minute also would add to this play in here. Right, the same exact thing is, for example, in here. Like if you take this sideways build up, okay, where does it get induced? Boom, momentum and speed. Also huge equals in here getting induced. Also Asia low gets induced. Very nice play. 10 out of 10 picture perfect play. But guess what? Where's the stopping power? First of all, also external liquidity with medium inducements. And then guess what? That's Vic was the stopping power. But where's the POI? Where's the imbalance? Guess what? It's the same exact thing all the time. And just this is a 5-minute candle. We can obviously go down to the M1. Again, all is based on the right understanding, if it loads, of the build-up inducement play being completed, and only then you look for mitigation areas. And you see there's nothing in here. It's just obviously mega crazy candles. So we have to go even lower to find the right POI. Let's just do it like this quick. So, because we have to go like probably in the seconds to find this POI. Let's just do 15. Again, this is not needed at all. I'm just giving you this example so you see how that actually works in real life and the theory behind it, like theory, the reality of it. There we go. So that is the point we were looking for, and surprise, surprise, that is the last point with imbalances. So you pick this POI in here as your stopping force after the inducement, and below this equal low liquidity areas. Super, super nice. And we have to extend it over. A little bit tricky here now. And shocking surprise. Oh, who would have known that it tapped perfectly into that POI, right? Shocking surprise. And then again, they used the news to mitigate these areas again. It's always the same. As long as you understand this, you're literally ahead from like literally 99% of traders. As again, you understand the overall bigger picture and then combine it with logic. And then again, most people will like, oh, news are random. With this news release in here, it's hard to see because of the box, right? There's a wick from here to here, right? And again, this perfectly mitigated this area. I'm not saying trade the news at all. I'm just giving you this example as so you understand, okay, this is what happened after, guess what? Relevant break of structure, boom, taps the inducement mitigation, and then shockingly, surprisingly, takes completely off. Again, nothing is random in this market as long as you understand this. You literally have the power in your hands. And then it's the same exact thing. You don't just randomly target like all the way to the high. No, you target the next liquidity areas. Okay, equals in here, Asia, this one, this one, this one. Boom, get out of here, right? Instead of like aiming for new all-time highs or something like it. No, you should not do that. Target the next liquidity area because guess what? Boom, they're gonna show the reaction, pull back, and it's the same exact thing as always. Let's just cut it off here. For example, again, to show you again, it's always the same. It's always the same. On the M1, what do you have? This sideways build up of liquidity away from what? This liquidity grab as we took out these liquidity areas. If it wants to load, there we go. Boom, boom, boom. Took it out here. Induces the liquidity into the wrong direction. What is your stopping force? Order blocky situation. What's the entry? Relevant break of structure. Again, this point made the low, breaks it, mitigation, boom. This alone, again, is the essence to trading success. As long as you understand this, it's literally over. And a little side lesson, as this is very visible on the M1 news, again, as we spoke about it just a few minutes ago, are never random. News, again, as we spoke about it just a few minutes ago, are never random, right? They always fulfill the bigger purpose of the objective of what they're doing. Think about it, like how would this candle in here tap this perfect mitigation of this inducement we just broke down earlier with the news release. How does that make sense? If it would be real life, the news release has to be like, so now today we have the news release and the numbers are 1,000. Then the candle goes up. Oh, the news are 1,000. The numbers are so high. Sorry, not 1,000, minus 1,000. Oh, the numbers are so bad. Go back down the same candle because the numbers have been released wrong. Not 1,000, but minus 1,000. Oh my God. Oh, sorry. Not 1,000, not minus 1,000, but like 5,000. Wow. It doesn't make any sense, right? The news release the numbers have to be released, and then market has to react in a certain way. But clearly, it goes into two directions, which make zero sense with logic. Any fundamental trader in the world try to explain that. Why does the news release go in both sides if it's not a liquidity grab or for pure manipulation reasons? And there you go. It's more simple to accept this way than thinking, oh, fundamental news, blah blah blah. Same way, if the numbers are so good, then why does it shoot up here and then literally an hour later falls back down to mitigate these errors? How does that make any sense with numbers or rules releases or fundamental reasons? No, it's the build-up getting induced into mitigation and then continues. It's as simple. Try to think like that, think like a logic, and your life as a trader will literally improve by 100 times over that. But don't get me wrong, obviously, do not trade the news. Try to avoid the news if you can. I'm just saying the news usually fulfills the normal objective they have, but you still should try to avoid the news because, again, news are obviously highly risky to trade, and especially when you get the idea wrong and they completely gap over USL, and it's just not worth it, right? So just try to trade without the news. But I'm just saying it's good to know that the news have a bigger objective understanding and fulfill the bigger purpose as well. For example, this is a good example here, right? We took this short, we took this buy, and our system also projected out these buy entries in here, but guess what? We closed it before the news, even though we understood, okay, take out these areas up here because it was simply NFP news release. And again, as you see, they don't even try to like smack down low, right? Because again, the trap already was done, the news already was done in here, right? Taking out these areas in here, right? And then obviously completely fulfills again the normal purpose anyways. But still, you shouldn't try to trade the news for risk purposes, of course, right? Even though you have it perfectly obviously projected. Oh yeah, and by the way, if you want access to our system that full automatically alerts you these projections, here's just a few examples, right? You saw one earlier when we broke down this recent cell projection here. Again, it alerts you these plays literally live on the edge for multiple pairs, also indices. Again, you can have access to that as well. This is the link in the description. We call it the Lit Oracle. Probably the most insane intraday trading tool available in the market since the history of intraday trading. So if you want to have access to that, you can. We don't know for how long we will offer it to the public though, because it was in private use for more than a year. Now we just released it to the public for a short time. So if you want to have access to that, yeah, you can have that now. Comes in two versions. One is the Oracle only version where you just have the alerts and you have to use your own understanding in line with it. And the other one is the bundle option where you also have a whole educational package where, of course, some, or like not only some, but all of what we covered here and way more is explained in great detail. So when you want to learn from us directly in greatest detail in a step-by-step way, that also is available. You can check that out at the bundle option in the link below as well. Or if you want to get the creme de la creme, the Champions League of education, you also can apply for a private mentorship with us directly. That also is in the description. You have so much information now, you can backtest on yourself. I try to make this as Yeah, basically as value packed as you possibly could. Most people would charge like thousands for this knowledge I just gave you in here. So backtest all the stuff in great detail. If you want to use some tools, you have the options. If you want to learn in more great detail from us directly, you also have the options. But also just figure it out by yourself with all information I just gave you. Backtest, practice. And again, this is technically all you already need. So now it's showtime. Let's make something out of that. You can like this, and I probably will make some more breakdowns in the future.